Hi, everyone, and welcome to this 29th episode of the weekly market technical analysis. Here is Francois Hablé. Hope that you're doing very well. I'm very happy to find you through this financial program we use to do that each Monday. Most of people of you guys are already accustomed, and if your first time to discover us, my name is Francois Ablé again. I'm the main trainer and the founder of the GSTA, which is Global Street Trader Academy. Here is the front of your screen. You can find us to the through different social media as Facebook, YouTube, Pinterest, Twitter, and Google Plus. Right. So if it's not or not already done, I kindly recommend you to subscribe to this YouTube channel or and also to the Facebook page. And you can also let us some comments of you want. So if you have a critic about our financial program, then you can consider as proposal to improve the quality. Okay. So we going like quickly to jump start of the this 29th weekly market technical analysis. We're starting by our traditional disclaimer. So features equity ETF option CFD and others derivative used in trading are the great potential rewards, of course, but also a great risk of losing your capital. So please be careful with your money. Okay, you need to be aware of that, and you must know that trading is not a game, right? It's a job, so you need to be responsible uh, front of the risk which is around that. Okay. Perfect. So, weekly market technical analysis, as I said, the 29th episode of the this financial program, and we also take a look at the our traditional this like the usually product that we take a look as the USD CAD, Dow Jones Gold, Eurobond. Eurobond for people who trade on the futures market is great, but on the CFD I don't really recommend that, and because of like the spread and also the slippage is very difficult for trading that, and also if you're on the CFD, it might be like a cost like a lot to trade that. So you can go in to do the swing trading if you want, but to trade in intraday, it could be like a painful. So very careful with that. But I'm just talking about that because it's very important, right? Is the European debt. So it's very important to based on the our trading activity to know kind of clue about that. Okay. So let's jump it on the our traditional our technical compass and fundamental also, which is the US dollar index of FXM, which is like a basket of the all the others currency um, face to the US dollar. So you have the US dollar, of course. You have also the euro, the Aussie dollar, the Kiwi, which is the NSD, New Zealand, dollar. You have also like the six major currency on the trading for the currency foreign exchange markets. Okay, so this actually US dollar index is very important to know because it will draft you all the your trading analysis and your trading idea, and you can make a good profit with if you know where the market is supposed to go really, right? Because it's all the drive by the dollar. So based on this introduction, you know that my point of view never changed, right? Since like a couple months, I told you many times that you not be bullish. Like two month past, I told you to be bullish in the short term, and the most of we come to the this Fed rendezvous at the the meeting of the Fed, I told you to be starting to be bearish on that, because I'm not expecting that the Fed will increase the rate interest. Why? Because first time it was, if you have noticed, it was to the probability for the Fed CME tools, the Fed funds, they estimated to the 95% that the Fed will increase the rate interest, and now we downgrade to 75% based on the not quite good of the figures for the inflation, and also for the retail sales. So that being said, if you look at it on the calendar, economic calendar, you will see that the figures, which was 2.25%, because they're supposed to lift the rate interest at the 25% BP, so basis per point, right? But they decreased that to 2.12%, right? So that's why I'm very skeptical of the possibility of the rate interest. It might be lifted, but I'm not like very confident on that, because the inflation didn't confirm that the didn't give the confidence to the Fed to lift the rate interest. And I think the market has been already priced on the financial markets, because if you look at it, the this technical pattern that you see on the front of the screen, I show you all of you guys the last week before, and I told you that we just have to waiting about the possible double top on the US dollar index, and that we observe here, right? We break it effectively, this pattern. So you see here that we have kind of double failing consecutively on this gray zone here that I warned to you before. That's the most of time that we stay below that, and the most of the the bearish trend will draw on the US dollar index, and it's exactly this scenario that we expected. So now we break it, the neckline, which was estimated to the 12,150, and now we below that. So that being said, here, don't if you want to trade on the on the US dollar index, or you want to trade the Aussie dollar or the euro dollar, don't make a strategy and bearish strategy on that. Just like going to the bullish scenario, right? Because the US dollar index very looks bearish, right? We again fairly double time on this gray zone here, so I'm not getting to buy the US dollar index. Of course, I will make a strategy to bullish, and we see also we do see also in the others index that the index doing like a new highest record as the Dow Jones, and also the S&P 500. We quite bullish right now. So each correction might be bought to test like the new high. Okay. So US dollar index is very bearish right now, and also the bias of the Fed for the Fed's meeting at this Wednesday. I'm not expecting to that the Fed will increase the rate interest. I expected that they will just like stay with the 2%, or probably increase that a little bit to the 2.12% or 2.15%, not 2.25% related to the monetary policy, right? So it's this point of view that I would like to share to you guys. We can see quickly to the intraday, and you see that we quite a very bearish movement here on the US dollar index, right? So let's jump to the USD CAD. So USD CAD, also it depends of the US dollar index for sure. So if US dollar index is a look like bearish, for sure USD CAD will be also bearish. And also the CAD reinforce, because the CAD, we have like a good appreciation of the NAFTA. Even in the NAFTA is can be jitters, but I pretty much sure that the CAD is not is like way better to perform as the US dollar index. So that's why you could see sometimes that the way that the market's supposed to go and the USD CAD is like simply bearish, right? So we could have some a pullback right here because we break it. If you see, we break this trend line, like this oblique support trend line here. We break it, so we could make some like a pullback until right here, until 129 650 or 675, and then doing a pullback, and after going back to the POC. The POC, which is the point of control, is between the $27,500 and $20 20 28 27, something like that. So we could expecting drop it for the 200 pips or 150 pips on the USD CAD scenario. So very careful with that. If you're starting to if you want to uh, buy USD CAD, I think it's not like a good quite idea. Okay, I'm bearish on this pair, because we see that the dollar starting to be weakens, and also the most of that the Canadian dollar, the loonie reinforced. That being said, that the USD CAD will be for sure bearish, right? So if you intend to work on that, I recommend you to privilege the scenario of the bearish scenario, to not be surprised of that. So $29.50 could be your entry point for selling, or maybe like higher, and then you can sell USD CAD. That's my scenario. All right, so USD 30, US 30, which is the Dow Jones, the CFD Dow Jones. So Dow Jones like getting crazy because we saw a massive movement, a bullish movement. I'm just hiding the indicator for now. So we see clearly that the scenario that I suggest to you guys, when the market starting to rally into the 2016, and we do kind of contraction to this like triangle, it looked like some like a pennant pattern, and then we continue to that. I saw that many person would like to anticipating or to short on the US 30. Don't do that, okay? Don't anticipating any markets. We quite probably getting into the a bullish run. So don't anticipating like a highest point to short. Just buy what you see, right? And the US dollar, the US 30, sorry, looks very bullish, and each downward movement, I will buy that. Okay, I will buy that, because if you report like theoretically the distance between like the that theoretical strategy, if you report like the highest to the lowest point based on this triangle, you could see kind of target between the 29,000 or 29,500, right? So that means the Dow Jones are very bullish. There's like a lot of margin to progress or to evolve. So that's why I don't recommend people to shorting now. We just already break it like the previous highest, and he's doing like a little pullback on it. So that's it's a time to buy. When we in technical analysis, when we break in highest point, that means the markets are very bullish. It could be looks some like kind of euphoria movement, but don't take into account in your analysis, and you want to show that. Okay, just very be careful with that. And if you're working on intraday, I recommend you to privilege some like you can walk to the bullish and bullish and bearish in intraday. You can do it like the back and forth movement. But if you would like to trade on the long term, you want to doing kind of big short, is not the time right now. I will let you know for sure, but it's really not the time right now. It's my opinion, and all the things that I observe on all the index, I think that we could be like getting into the bullish run until the holidays, Christmas period, right? So the rally of the end of this year might start, and that's why I don't want to short the index right now. Okay, so be patient with that. We could take a look quickly to the intraday. That's we very bullish. And yesterday when I preparing this financial broadcast, we were here stuck to the Ishimoku. I will show you that, and that's why I recommend to people. Yeah, it's right here. If you see here, we kind of going until the close to the Tenkan Sen, and we stuck here, and we starting to going back to pursue the ease movement. So we quite bullish now, right, on the US dollar index. And also we saw that the US dollar index are getting bearish. So I think it's not the time to short the index. Okay. Especially the gold. The gold, as I told you before, the 1180 and 1190. It's the range zone of the gold. So there isn't to do in this area, nothing to do there. So that's why I'm just waiting that we'll drop it again into 1180. Then I could buy the gold, because it would be like the second test, right? Could validate some kind of double bottom. And very careful with with Wednesday on the gold, because if the Fed tweaks its comments, like everybody the market expecting that the Fed will be will doing some like a bullish comment, even they don't increase the rate interest. We're not expecting that they read the hike the rate interest as the 25 basis point. They could also tweaks a comment and doing like a strong or a hawkish comment, right? So if they doing that, the gold could like collapse. Okay, but if they going with the easy comments, and they not like show that they will like increase the rate interest at this year, because the expiration is just like 2 years. There are just 2 years left to increase the rate interest. After this Fed meeting, we have another Fed meeting to December. So if they not show that to the talking, if they not show that they intend to increase the rate interest, we could see the gold like going be bullish, right? So it depends on the comments here on the Fed. So very careful with Wednesday. It will be the Fed meeting, so don't be distracted. But my scenario is that the gold could going back to this area, and then I can buy the bottom of the gold. Okay, so here right now we quite neutral. Okay, so I'm not doing nothing on the gold. Okay, so let's quick finish that with the Eurobond. So Eurobond, there's also nothing to do here, because on the bond, um, we have some like the budget of the Italian budget this week, and the government of the like the actual government don't intend to consider the weight of the European debt. Okay, they will ignore that. They say that to with the party right now, like I think it's a five legger. They said because they consider to be Euro skeptical, so they said that we will not consider the European debt to our upgrade for our budget. So that's the kind of a fear of the market, because you know that like the most of big country on the market, it's Italia, France, and Germany. And if one of those said that we don't want to consider this European debt, that being said, Germany and France must consider and support the weight of the European debt. So that's varying like kind of fears on the markets. So that's why we could see that the bond could be bearish a bit. But my vision on the European debt is still bullish, because they did not finish to the quantitative easing as Mario Draghi said. And you know that actually right now the situation on the European banks, the Danske and the Deutsche Bank, has been like very in trouble. So they prepare kind of emergency measure, like a secret emergency measure to support the bankruptcy, the possible bankruptcy of those biggest banks. Okay, so that's why the European bond. I'm not saying that the European bond will be bullish in the long term. I just see that the European bond could be just oh sorry, not bearish but bullish. We could see some a corrective movement in the short terms, but I will intend to buy the lowest, because when we see this technical pattern, it's as it's descending wedge. So usually we going up instead to going down. So you can just waiting about this progression. We could see some also if you do scalping, like a technical short term, we could see kind of ascending channel here. So it's that's why we could see a corrective movement. So right here, so we do observe like a ascending channel. So ascending channel most like getting into bearish instead bullish, right? So that's why we could have some like a little bit correction right here until the bottom here, and after we can getting back to the lower and then going up to the bullish. Like I don't want to short in for the long term Eurobond, because we know that the ECB could continue to increase to increase or to maintain the quantity of the money as the PAP, the purchasing asset program. So that's why I don't want place on the bearish scenario on that. But in short term, for sure, if you do intraday trading or Eurobond or scalping, you can like definitely work on or shorting the bond. Okay, so that's why it's all of that I would like to tell you. But after that, I will just stay now neutral and wait and see what's happened to this product. Okay, so let's doing like a quick recap before to finish this program. So the weekly market summary, technical. So USD CAD, we saw that we quite bearish. We just waiting the pullback until this like 29 675 or 29 650 and then we can shorting this highest point, sorry. And the Dow Jones is already the same song, technical short-term neutral to bullish, right? And technical long-term neutral to bearish too. And the gold at the technical short-term, it look like it's bearish to neutral. And then for the long-term, my strategy is to buy the gold, so neutral to bullish. And Eurobond, I'm still neutral right now. And because I intend to buy the Eurobond, even we evolve to the technical short-term pattern, which is ascending channel, which is like most of the time finished to the bearish movement. But I'm just waiting about that, and then I could like intend to buy the lowest point as much as possible. Then it going to the neutral to bullish. So here is all the key levels that we can follow on that. If you trade USD CAD, Dow Jones, and gold like me, but it's all of that I would like to talk this Monday. Hope that you love it, and if the case, please feel free to share, like it, and also let a comment at the Facebook reviews, or also let a comment if you have the critic on that. Then we can use that as a proposal to improve the quality of our show. And I will give you a rendezvous for tomorrow for the weekly market fundamental analysis. I thank you so much for watching this video, and see you around. Bye bye.